Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for August 13th through the 17th. We're going to do this pretty quick. We're going to go ahead, talk quickly about last week's here. We can just quickly see last week we had some negative, we had some positive within the NASDAQ, the Russell 2000, Dow Jones, S&P 500, and my portfolio were down slightly last week. So in this video, we're going to be covering the four main indexes, go over the emerging markets, take a look at my portfolio changes for the week, take a quick look at M1 Finance, Merrill Edge, some trades that I made this week, take a quick look at the futures, and then go right into talking about some stocks that had earnings, Walmart, Cisco, AT&T, and then kind of talk a little bit about Elon Musk and Tesla this week, and just quickly touching up on a few other companies that announced some earnings, and then go and discuss our oil, energy, housing numbers, steel, gold, and bond. So that is what is in store for today's video. Last week we had 11 likes. So we beat our record of, I believe, 8 or 9. So we did beat that 10 threshold. If we can get 15 likes this week, that would be highly appreciated. So drop a like if you do like the video. Let's go ahead and get started. So we already covered last week, had some positive, had some negative. Taking a quick look here at the S&P 500. This week we were positive 0.59%. That's a positive day, or it's a positive week. Year to date up 6.6%. So very good so far. We're just continuing to chug. We are almost, if not hitting record highs. We are just slightly off. I believe we're about 1.5% off from record highs right now. So very close to hitting it. Let's go ahead and take a look here at the Dow Jones. Dow Jones this week, lots of help here. 5-day change of 1.41%. Dow Jones had an amazing day on Thursday. Walmart, Cisco, and so many others here, announced earnings. Many of the retail stocks here, but Walmart primarily, and I believe a couple other stocks here within the Dow Jones really helped them out, helped them bounce nearly, over 1.5. So very good there. Dow Jones up 1.41%. Year to date, 3.84. It's still in the back. The Nasdaq this week is the one here that took a hit, down 0.29%. A lot of negative news. Tesla's out there. Facebook had some negative this week, and so many others. So year to date, still positive, 13.22%. We have the Russell 2000, 5-day change up 0.36%. Year to date, 10.25%. Then we have the emerging markets. There's still that rattling going over, with Turkey. And now I kind of want to showcase here a little Argentina. So the Argentina Central Bank has been selling reserves as the peso hits record lows. So what's going on over in Turkey with inflation and with their currency kind of doing some rebounds and such, this could be going on also over in Argentina and some other areas, other countries. So IMF, they're always looking as a way there. But interesting article, just a very quick. I was trying to find some more information as far as global news. So I got some gold stuff here towards the end, but I'll go ahead and have this article here in the bottom below. And let's go ahead and continue on. So my portfolio this week moved up very nicely. I made $706 this week, a difference of 2.76%. It was mainly from my IRA. So within my IRA, again, mainly Apple in there. We have the other portfolio on M1 Finance for my wife's portfolio. So what helped her out this week was Apple, of course. We had Walmart, Cisco, both jumping up very nicely, and AT&T also coming off those lows. So very good growth there as far as portfolio changes. Now taking a quick look here at the M14 portfolio. So this is my wife's Roth IRA portfolio over on M1 Finance. She's actually positive 3%. It hasn't been really positive since the beginning of the year. You can see here back on January 20, we actually started this portfolio, going into the year. I put $5,500 into her portfolio for her Roth IRA towards contribution for 2017. I'm making we set up weekly allotments of $10 on Monday to just get deposited in. And, after she deposited and bought at highs, the market did collapse there here in February, all the way down there. We again broke below those lows in March, and we've actually recovered everything here towards the end. We're now at record highs here of $5,893.39. We have cash flow. Net cash flow is $5,839.18 and market gain of $54.21. So where we're getting these gains, 54 of it is from market gains, and 113 has been paid out in dividends year to date. So very good growth there. You can see here that for a while, Walmart at one point was actually down in the portfolio by nearly 20%. We had AT&T also down in that 15% range, and a few others here. Cisco, for example, has always been a great company to invest in. So we're going to be discussing a little bit of their numbers here this week. And then I do have my Merrill Edge platform here. So I made some additional purchases. We can take a quick look here at M1 Finance. So this week, as far as activity goes, 5-day change, what we bought this week. So we had Blackstone paying out some dividends. They had 382 paid out and then 77, so maybe some special payout. So we had $16.75 of new money going into the market on Monday. We bought up some Caterpillar. Right now it's very low due to tariffs, getting hit with the steel and aluminum tariffs right now. Lockheed Martin buying it at a discount. Altria and AT&T. AT&T, as you know, bounced off those lows. I didn't see a whole lot of news, but some minor news came out for them as far as winning a lawsuit or having a lawsuit dropped against them. So we'll discuss that here. And then over on my Merrill Edge account here, over on, not him, I was going to say M1 Finance, on Merrill Edge. So I picked up a couple new shares. So as you know, during our monthly recap, I had about $13 to $15 sitting in these accounts in cash between my IRA and Roth IRA. So what I had did is I needed to invest the money. I don't like money just kind of hanging out there, not really invested. If it's in the account, I want to have it invested. So I looked for a couple stocks that I wanted to buy while doing this whole purchase. I actually ended up really wanting to pick up ticker symbol SG. Let's see, I don't know here. I'll have to quickly look it up on the side, but I couldn't afford that stock. It was just slightly above my price range of where I could actually make a purchase. Oh, here it is. So let me go ahead and bring this over. So this is the stock that I had considered adding to my portfolio. Interesting stock I had looked up today. It's ticker symbol SGC, Superior Group of Companies. It was priced at $19.09. It's currently trading below its 200-day moving average and 50-day moving average. Has a nice yield around 2% starting. Dividend payout of 10 cents per share. PE 22, forward 17. Price to book 2. Price to sales 0.99. Return on invested capital is 6.93. Had assets of 220 million, liabilities of 93 million, and then has had increased revenue, net income, free cash flow over the last 10 years, and revenue, net income over the last 5, with some loss of free cash flow here over the last 5, and then I kind of put some additional information in there. So it looked like a great stock that I wanted to buy, but I could not afford that $19 point. So I ended up, changing a little bit, look at what else I could purchase. So here within my IRA, I was able to purchase Apple Hospitality. This is a REIT. It mainly deals with, healthcare. So I thought this was a pretty interesting one. It's currently down 0.34%. It's a monthly paying REIT, and it's basically equity real estate. Yeah, we already know that. And so I have 34 cents left over in this account. And then in my other account here, my Roth IRA, I also had some cash sitting in that one as well. I wanted to have it invested. Oh, I also got paid out some dividends there in Apple. Apple paid out some dividends, which was automatically reinvested back into the stock market. Let's go back to the IRA. So Apple paid out, I believe, right around $33. I was able to pick up 0.15 of a share over on Merrill Edge. So that's kind of interesting. And then back up my Roth IRA. Roth IRA, I picked up, what was it? Oh, land. So I believe it's, why is this not loading? It says it's loaded, but that's not the correct information. Ah, there it is. Ticker symbol land. This is Gladstone, another REIT, real estate investment trust. I was able to pick this up here at around $12 and some change. I have 23 cents left over in the account, so I wanted to just have that money invested. I use FinViz in order to screen a couple stocks, and then I use Y charts to kind of narrow it down between about 10 different stocks and then ended up with these two to make my investments in. I'm going to go ahead and set them up to just reinvest their dividends back into themselves, and we'll see how that kind of goes going forward. So that is my portfolio for the week there. Now going into some stock futures, going into Monday, everything's looking pretty positive. One thing I didn't cover or have an article up is that President Trump wants to go ahead and decrease the amount of times companies need to publicly release their quarterly. They only need to report quarterly, right? Right now they're reporting 4 times a year. He wants to make it more corporate friendly, so they only have to report twice a year. Many investors are against it. Many people, just in the public in general, are against it. Corporate, of course, is on the side. Corporate changes are always positive. Tax reform, all that's all for the corporate. So here, Walmart beats revenue by 7 cents, beats on earnings per share and on revenue. So Walmart, they had estimated at $1.22. They beat it by 7 cents at $1.29. Revenue came in at $128 billion, 3.8% year over year, beating expectations by $2.03 billion. And shares had actually gone up, 10%? I believe in the after hours here. So here, U.S. sales impress at Walmart. So top sales estimates, they had a 40% pop on e-commerce sales. Comparable sales rose 4.5% in quarter two. So overall, lots of people going out there spending money. So estimates are a 2.2% increase. Traffic was up 2.2%. Average ticket was 2.3% higher. So some of the stuff here towards the bottom. Oh, that's not the one. Next one. Okay, so here, again, consumer staples rally a defensive play against macro concerns, analysts say. So here towards the bottom, I thought this was kind of interesting. Customers tell us that they feel better about the current health of the U.S. economy as well as their personal finances. So that was the CEO, Doug McMillon, discussing just overall, how he sees and how he's seen the customers as far as coming in and buying products. And Walmart did soar, so it is about 10% there. And then Nordstrom, we'll take a look at that here in just a minute as well. So Walmart, 5-day change up 8.51%, still down year to date 0.91%. This is one we discussed just a little bit ago. At one point, they were down nearly 20% not too long ago. Here, back in May, they were down nearly 20%. I've been loading up on them for the past, 1 or 2 months now. You can see it during my monthly recaps. I've been buying Walmart up. Cisco released some earnings this week. They beat it. Earnings per share came in at 70 cents, beating it by 0.01%. Revenue of $12.85 billion, 5.9% year over year. Beats by 80 million, so shares did rise. This shows 0.01. They actually did much better, so their forward guidance is solid for quarter four, healthy guidance. So again, up 3.3 in the post market, but actually grew much higher. Revenues were up 6%, and reoccurring revenue ticked up a percent point to make a total of 32%. Earnings per share grew 15% year over year, so they had a strong finish. They're also projecting future quarter four looking very nicely as well. So Cisco here up 4.77% on the 5-day change. Year to date up nearly 20%. Great stock there. And let's see here. So this is AT&T news. So now we're kind of moving into AT&T. So federal judge rejects much of the FTC's $4 billion suit against DirecTV, which is now owned by AT&T. So this is a nice little win for them. They're not going to have to shell out some money. And then AT&T closes acquisition of AppNexus, filling out strategy. So AT&T has closed on its purchase of AppNexus, giving it control of one of the biggest independent ad exchanges. That in turn fills in a piece of their forward-focused strategy AT&T laid out as it's framed in its post-Time Warner direction. So they want to get some advertising money in there. So AT&T Advertising and Analytics business led by Brian Lesser, and a couple other little here and there snippets. So AT&T made a slight bounce off. They were down in that $30 range. I don't know if they touched that $29 range, but I know they were trading a $30 range for quite a while. Up 2.39% this week. Very nice. I know a lot of investors over on the dividend growth Facebook groups have been really discussing and buying up AT&T. I think somebody went out there and purchased 200 shares. It was either 200 or 2,000, but they really like that yield. They like that price, and they're up. So year to date, still down 15.05%. But overall, great long-term company, better than bonds. Musk speaks on difficult and painful year. So, as you know, Tesla bled out a little bit this week. Elon Musk was interviewed and describes, the most difficult and painful year of his career. He's exhausted and struggling to match the challenging Model 3 production. He also talked a little bit about his workload and use of sleep medication Ambien. And okay, so he did a couple tweets. As you know, he's kind of known, he's almost like President Trump, announcing tweets over on Twitter for, taking the company private and, so much other stuff. So he can make his stock climb, he can make his stock fall. SEC is probing Musk's communication with the board. So after his Twitter announcement last week of taking the company private, which was not really announced to his board members, so SEC is kind of probing into that. And Tesla reporting bracing for billions in liability. So Tesla's legal team is bracing the company to face billions of dollars in potential liability from the private lawsuits over disclosures, tweets Fox Business. He tips that Tesla's internal legal staff believes private litigation could be more costly than any possible SEC enforcement fine. So not so good on Elon Musk. So this is just a little article here. I posted this over on Facebook earlier this week. Kind of gives it a nice breakdown of what exactly when he tweeted that they had secured funding. Tesla confirms Musk's proposal, and then it was all sort of downhill after that. So they're actually trading, I believe it's trading below $300 now. I'm not 100% sure. We can actually take a look right now. Let's go look. So it's trading at $305.50. 5-day change down 14.06%. Down year to date 1.88%. So you fall, you rise hard, you fall hard. Apple also in the news. I don't have a whole lot of news as far as what Apple did this week. I just know that they did an amazing job. Up 5-day change, 4.84%. This stock continues to climb, $217.58. Year to date, so my portfolio, let's see here, where is it? All accounts, my Apple buy-in was at $162.61. I'm up 33% on this position. And then also what my wife's portfolio is up very nicely as well, somewhere in that 25% range there for her. So really great buying opportunities way back when they were really scared of earnings going forward dropping, their iPhone sales, people jumping out of that. That was a great buying opportunity. Nordstrom also announced earnings beating expectations, jumped this week 12.55%, up year to date 24.91%. If you were to bet, L Brands or Nordstrom, definitely Nordstrom. Macy's dipped nearly 10% this week after missing their earnings. 9.86% loss. Year to date, still up huge. I'm actually surprised as one of the highest year to date that I've noticed, noticeable that I've seen. 43.03% up year to date. JCPenney's on the opposite end of that spectrum. 5-day change down 26.03%. Year to date down 43.35%. Do you guys shop at Macy's or JCPenney's? I don't shop at either of them. And now we're kind of going into the home builder. So home builders 5-day change is up. So, there's been a lot of 50-50 discussions whether the stock market's really falling off its highs or if it's just beginning to settle. More people are going back to school. As you know, school's picking up, in a week or two. People aren't looking to move or acquire new houses or have them built now, as they're kind of getting settled back in and getting off those summer highs. And, just in general, rates have been, have gained over 1% in the last year or two, which a 0.5% increase in interest rate is about a 5% or 10% loss in buying power. I believe I kind of I wrote up my math on a piece of paper or on a document, and then I forgot what it was. But anyways, housing up. I believe it's still going to continue to kind of climb, but much slower than it used to be. So oil So this week, some of the main things that affected oil prices was that they had a report of just extra money on hold or extra money on hand. So oil prices dropped on Wednesday as a report of rising crude inventories as the outlook for global economic growth darkened. So you can kind of stop the video right there and take a look here, starting on money on Monday, not money. As far as what had happened with the oil prices, what kind of drove it down this week, as they are down 2.77%. Year to date, still up 13.98%. Oil can't catch a break there. Moving into the dollar here, dollar continues to decline week after week. Stronger dollar. It started off right around 95 and 16, 95 and 18, climbed all the way up now to 96 and 12. Dollar is getting stronger and stronger, which is driving metals down. So silver down 3.4%, falling below $14. It's now at $13.92. I've seen a lot of investors really looking at it and considering buying. I don't recommend buying paper, like just the bonds or these. If you're going to go out and buy silver or gold, just buy the physical versus something here that can be really manipulated. But gold down 2.3% as well. Year to date down 9.32%. And this is an interesting article. This isn't really news related, so this is just something I heard someone mention that the central banks have been dumping gold, and I couldn't find an article that was actually published anywhere. This is as much as I could see as far as central banks dumping gold to suppress prices so that people will remain in collapsing currencies. So here, I mean, this is just any other website talking about information, but central banks had bought up a ton of gold after the recession. So in 2008, gold was taken from $1,000 or to $700, and silver was pounded for 21 to 7. So we've seen these prices here. Gold has fallen in the past all the way down to $700 and silver at 7. So when we're looking at silver here at $13.92, it can still fall, and gold, this doesn't show you the actual worth of the gold, but I believe it's in the $1,100, $1,200. I know it's broke below that $1,200 point. And then bonds, as the dollar gets stronger, bonds have been getting bought up here this week. 5-day change up 0.23%. Year to date down 2.71%. So that is all the information I wanted to cover in this video. I didn't want to make it too fast, but I also didn't want to make not enough information. So hopefully that was a pretty good review. If you guys did like it, let me know by giving the video a thumbs up. If you have any questions, leave a comment in the comment section below. And of course, I want to thank everyone for watching up to this point. Again, if you liked the video, hit that thumbs up button below. I highly appreciate it. It helps out the channel. If you are brand new to the channel, remember to subscribe for future financial videos. If you have any questions at all, leave them in the comment section below. I always reply to your guys' comments. And of course, as a friendly disclaimer, I am not a financial advisor, any sort of tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself, trying to help others make their money work for them. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.